So India is once again putting on the table the complete ban of Bitcoin and cryptocurrencies. Now, early last year, India basically did ban, or essentially banned, the ability for businesses and entrepreneurs to deal with cryptocurrencies, as the RBI, which is the Reserve Bank of India, that governs basically every single bank in the entire country, made it illegal for any bank underneath it to deal with any business or venture dealing in cryptocurrencies. So if there was an exchange, if there was a project, or if there was a business that just wanted to accept cryptocurrencies, needed to liquidate those cryptocurrencies and then deposit some of the money into a bank in India, they weren't allowed to do so. So this massively crippled the digital currency economy in India at the time, and has up until this point. But now they want to go a step further, and they want to completely ban the use of Bitcoin and cryptocurrencies in the country. Now, not only is this a direct contradiction to some of the things going on behind the scenes in India at a more strategic level, but it's a direct threat to people in India who are looking for an alternative to their constantly inflating and devaluing currency, which is the rupee. So in today's video, we're going to talk about some of the history about what has actually gone on, what's going on really behind the scenes, and what this means for Indians, because they are facing a very critical time in the future of their country, the economy, and the welfare of themselves, their people, their friends, and their families. So guys, stick around and let's get into the video. So here we have an article from CoinDesk, Indian government again discussing ban on cryptocurrencies. So it says here that the government of India is said to be renewing its efforts to completely outlaw public cryptocurrencies. A report from the Economic Times on Friday, citing anonymous government officials aware of details, said that a number of government departments in the country have backed the idea of a complete ban on the issuance and trading of cryptocurrencies. The Department of Economic Affairs, Central Board of Direct Taxes, Central Board of Indirect Taxes and Customs, and the Investor Education and Protection Fund Authority are all in favour of the ban, the officials said. A draft bill dubbed Banning of Cryptocurrencies and Regulation of Official Digital Currencies Bill 2019 has also reportedly been shared with certain government departments. While it is not clear what official digital currency refers to, the country's central bank was previously researching launching a digital rupee. How absurd. How utterly absurd banning Bitcoin and cryptocurrencies for the people to make, who should be allowed to make their own decisions on what they use, as money and what they can and can't buy. Now, we talked about this. I talked about this. I've talked about this several times. Back in April 2018, I covered what was actually going on at the time when the RBI decided to stop banks in the country from dealing with other businesses using cryptocurrencies. I'm not going to go into this in a lot of detail in this video, but I'm going to put a link either up here at the top of the video or down in the description if you want to go and check this video out and get a little bit more context about the research I did back then and what this actually meant for the country. Now, as I was saying, the original directive came from the Reserve Bank of India. So you'll see here it says India's central bank. So this is no different to here in Australia with the Australian Reserve Bank, the Reserve Bank of Australia, sorry, and pretty much every other central bank in the world. They call the shots, all right? Don't be mistaken. Reserve banks, central banks, they call the shots on what's happening in the economy. Now, what they had here two key sections that concerned digital currency. So you can see here section 12, central bank digital currency. Rapid changes in the landscape of the payments industry, along with factors such as emergence of private digital tokens and the rising costs of managing fiat paper metallic money, have led central banks around the world to explore the option of introducing fiat digital currencies. While many central banks are still engaged in the debate, an interdepartmental group has been constituted by the Reserve Bank to study and provide guidance on the desirability and feasibility to introduce a central bank digital currency. So what that's saying in a nutshell, we don't want external currencies that are not in our control. We want to control the digital currency and thus continue to completely have utter dominance over the national currency and the national economy. Because what Bitcoin imbues in its operation, in its protocol, is free market principles, is Austrian free market principles, and the ability for people to use a hard, sound money. That is key for economic growth, is free market principles. And for a currency that cannot be controlled by any one person, that is self-sovereign through the protection with private keys, that has a known and reducing emission supply. So that's what it is in a nutshell. They want to control the money. Bitcoin, they can't control it. So Section 13, ring fencing regulated entities from virtual currencies. Ring fencing, we're going to block them, right? That's what that's saying. We're going to block businesses in this country from dealing with cryptocurrency. Let's read it here. Technological innovations, including those underlying virtual currencies, have the potential to improve the efficiency and inclusiveness of the financial system. However, virtual currencies, also variously referred to as cryptocurrencies and crypto assets, raise concerns of consumer protection, market integrity, and money laundering, among others. The Reserve Bank has repeatedly cautioned users, holders, and traders of virtual currencies, including Bitcoins, regarding various risks associated in dealing with such virtual currencies. In view of the associated risks, it has been decided that, with immediate effect, entities regulated by the RBI shall not deal with or provide services to any individual or business entities dealing with or settling virtual currencies. Regulated entities which already provide such services shall exit the relationship within a specified time. A circular in this regard is being issued separately. Pretty powerful stuff. Now, these are the banks governed and regulated by the Reserve Bank of India. And as you can see, it is a lot of banks. It's basically every single bank or financial institution in the country. So this one directive that came from the ABI completely cut off any exchange, any business, or even like you're just a business, right? You're just a business operating and you decide to accept Bitcoin. You can't sell the Bitcoin because you can't deposit the money in the bank because the bank has just been banned from dealing with you. But what that could actually do in turn is encourage that business to use that Bitcoin, that cryptocurrency, without actually converting it back to fiat, which is what will happen in the long term. Again, just due to free market principles and the natural evolution of money and society. But anyway, this was a really big deal. And despite this, right, despite what the RBI did, which was a huge power play to try and restrict cryptocurrencies from being used in the country, there has been growth in Bitcoin volume in India ever since. Here we are on local Bitcoin's volume for India. We can see the volume has been increasing since 2016 up to the current day. Why is that? Fundamentally, it's because, and actually I should get my head away so you guys can actually see that chart. So you can see that it's been increasing ever since. The trend line is going up. Now, why is that? Well, it's the same as what is happening in South America. Countries, people are fleeing to Bitcoin as a hard sound money alternative because their local currencies, one, classic example is an edge case, but classic example is the Venezuelan bolivar, which is literally going to zero. It's basically worth nothing. And Venezuelans are banned from even holding any other foreign currencies. They can't even hold US dollars. So what alternative have they got? Bitcoin. That's the alternative. That's the savior for these people. Now, India's rupee, as you're about to see, has been hit hard by inflation for over 50 years and is following a scary and similar trajectory to other currencies that have been inflated due to poor economic policy over a long period of time. So as we can see here, what we're looking at is the blue line is the yearly inflation rate of the rupee. You can see here in 2013, between 2012 and 2013, the Indian rupee was inflating as high as 10 to 12% a year. Now, the black line is the CPI, the Consumer Price Index. That's a measure of how expensive things are getting, but it's not actually things are becoming more expensive. It's the spending power of the money is going down. So it requires more dollars to buy the same good. So CPI measures the increase in prices as businesses need to raise prices to get the same value as what they were getting previously. Otherwise, they'd be out of pocket. Everyone has to raise prices because the spending power of the money is constantly going down. Now, to give you some more perspective on how bad this has been, in 2019, you need $7,403 equivalent of Indian rupee to be worth the same as what $100 was worth in 1958. So in a bit over 50 years, the Indian rupee has been inflated by 7,303%. Let that sink in, right? That's an average annual inflation of around 7.31% a year for over 50 years. So it's no wonder the central bank is coming out swinging at Bitcoin and cryptocurrencies, because they know what's going to happen. They know people are going to flee to it. That is what is going on. They know people are going to flee to it. Gold was the alternative hundreds of years ago, or not even hundreds of years ago. Let's say 80, 90 years ago. But we have digital currencies now. We have the internet. We have modern technology. Gold will never be used in that way again. It'll still be used as a long-term store of value. It'll still be used, have utility for integrated circuits, for jewelry, for other things, but it will never be used the same way as money again. Bitcoin is the uber gold for the modern day, and countries that are experiencing this kind of inflation, as again what's happening in Venezuela and other South American countries, are fleeing to sound money like Bitcoin as an alternative to avoid this kind of awful inflation. But let's dig a little bit more deeper. This goes a lot further and gets more troubling, unfortunately. So here's an article I found. India's economy added 1 trillion under Modi. Modi's the current prime minister, I believe, but not the millions of jobs it needed. So India is on track to be the 5th biggest economy under Germany, Japan, China, and the United States. So they had some foreign investment come in, but the growth of the country was fluctuating. There's rising unemployment. What happens next? And this is the most crazy thing, right? India, on track to become the 5th largest economy in the world, but 1 in 5 Indians are still poor. 270 million Indians were poor as of 2012. Something like 20% of India is still under the poverty line. Why? Well, it comes down to money. It comes down to constant inflation. How can anyone get ahead when the spending power of their money is going down on average by 7.31% a year? You can't even keep your money in the bank for long term. You have to spend it constantly because for fear of the spending power of the money going down. It changes the psyche of the population in regards to how they live, how they spend, when you constantly have to be offloading money in fear of it becoming worthless in a few weeks' time or a few months' time. It is in essence a form of total control and dominance over a population. And here's another really bizarre thing that happened during 2017. They took away the 501,000 rupee notes in this anti-money laundering black money scandal. So on 8th of November 2016, Indian Prime Minister Narendra Modi announced that high-value currency notes would be withdrawn from the financial system overnight. He said it was part of a crackdown on corruption and illegal cash holdings. A year later, economist Praveen Chakravarti looks at the legacy of the controversial move. So, Prime Minister Narendra Modi decided to extinguish 86% of the cash in the country overnight. Overnight, right? This caused huge panic and hysteria around the country. Why do something so big overnight? Think. He cancelled all 500 and 1,000 rupee notes and replaced them with a newly designed 500 rupee and a newly introduced 2,000 rupee note. Doesn't that kind of contradict the whole purpose of it? You're trying to get rid of these large rupee notes, but you're just replacing it with an even larger one? This move was erroneously described as demonetization, and the name has stuck. Technically, it is not demonetization, but a refurbishment. So what they did is they took away this 1,000 rupee note and a 500 rupee note, and they just replaced it with another 500 rupee note, a new one with newer technology, and a 2,000 rupee note. The thing is, people had to go to a bank to get them exchanged. Now, I assume if people didn't have a bank account, and many people in India didn't have a bank account prior to this, they had to get a bank account in order to produce the swap. Another thing behind this is the reason why there's a 2,000 rupee note is due to inflation. As the value of money goes down, higher value notes have to be created. That's a clear sign of a country's inflation is when you start seeing really big notes. So I was in Japan recently. I've been to Japan a lot of times. I love Japan, amazing country. But they have these 100 yen and 1,000 yen and 10,000 yen notes. You look at it and you go, why do they have such large denominations? It's not out of choice. It's because they've experienced massive inflation. Every country you see that has experienced really bad inflation over the preceding decades. It's a really quick indicator as soon as you get to a country when you see ridiculous notes like 1 million notes and 1 billion and 1 trillion like they have in parts of Africa. The value of their money is going to zero through reckless government spending and oversupply of the money. They're debasing the currency. So, very interesting move to do this overnight. I could speculate on what the intentions were, but I think you get the picture of what was going on. Now, ask yourself, the central bank is banning the use of Bitcoin and cryptocurrency. They're swapping out the notes. They have massive inflation. Surely that must mean the Reserve Bank and the Indian government have some kind of strategy around this, right? Surely they're looking into the future and they're working in the best interests of the people. The RBI buys gold for the first time in nearly a decade. The RBI last bought 200 metric tons from the IMF to boost its reserves in November 2019. Mumbai, the Reserve Bank of India, has bought gold for the first time in nearly a decade, signalling that the metal could be in demand as a store of value when returns and capital values of fixed income bonds are declining in a rising rate environment. The RBI added 8.46 metric tons of gold to its stock of holdings during the financial year 2017-2018, then ended June 30th, taking the level of gold reserves to 566.23 metric tons, according to its latest annual report. It last bought 200 metric tons from the IMF to boost its reserves in November 2019. Isn't that interesting? All within just a couple of years, we see major moves coming from the real power players in India. Central bank gold demand won't end soon, as RBI expected to buy 1.5 million ounces this year from analysts. Here's another article. Generalist investors continue to shun the gold market to focus on record equity prices, but there is still one sector that is interested in precious metal. Central bank demand remains an essential factor for the gold market, and their appetite is not close to being sated anytime soon, according to their analysts. Speculation is growing that India's central bank will add to its gold reserves this year. In a recent report, Howie Lee, an economist overseeing Chinese banking group, said that he estimates that the Reserve Bank of India could purchase 46.7 tons of gold in 2019, or about 1.5 million ounces. Now ask yourself, why are they buying gold? Well, what did gold used to be used for? Gold was used for money. Gold was a currency. Paper fiat worthless notes that we use today once were backed by gold many moons ago. But why would the central bank, in light of the ban on Bitcoin and cryptocurrencies, which is essentially at the moment still a retail phenomenon for the people, why would they be buying gold? Do they suspect something might be happening to the economy? Are they lining the coffers in preparation for a potential global recession or a weakening global economy? Makes you wonder. Here's another article. China's gold buying spree continues as central bank market booms. China's central bank increased its gold reserves in March for the fourth consecutive month, continuing a major spree in buying of the precious metal. People's Bank of China figures cited by Bloomberg indicate the central bank increased reserves to 60.62 million ounces in March. Gold's attractiveness has increased as the US dollar remains weaker. Central bank dovishness has also affected demand. Here's another article. Russia's central bank chief. Love of gold stems from need to diversify. Russian gold buying spree is fueled by the need to diversify in order to anticipate and protect the country from economic and geopolitical risks, according to the Russian central bank governor Elvira Nabiullina. Russia's total gold reserves stand at around 69.7 million ounces or 2,167.9 tonnes, the central bank said in April, with gold representing about 18% of the bank's total reserves. So we're having major countries around the world buying up gold in huge quantities. India decides it's in the best interest of their people, of their country, to attempt to ban people from buying a currency that is seeing, from buying a hard money, sound money, that is seeing huge demand in countries that are experiencing massive inflation, yet at the same time decides it needs to protect itself with gold. Isn't that interesting? Isn't that somewhat contradictory if you really think about it? They're protecting themselves, but they're trying to stop their citizens from protecting themselves. Because here's the thing, in a lot of these developing countries, the one thing many of the citizens have is mobile devices and internet connectivity. So having a digital wallet with a bit of Bitcoin or a bit of cryptocurrency could be extremely easy. It could be an extremely easy and quick thing to spread, especially when you have in India, you have such a huge population. This could be something that could really get the people out and get them using something, getting them using this sound, hard alternative, especially in light of the fact that their money is going down by such huge amounts due to this terrible inflation. So what is this in a nutshell? You know, what is the summary just to wrap this up? I think this is a direct threat to the people of India. I think the people of India need to be making their voices heard about this, about what is going on. I think they need to look into this in a lot more detail. I think they need to start thinking about what could be the greater political moves going on here, and get studied up on their economy as much as possible. Because if this goes through, not only is this going to be absolutely detrimental for India in the case of continuing inflation and potential hyperinflation in the country, but it also could be used as a template for other countries as well. So this is just bad. It's absolutely terrible, and you know, a lot of people have got to start making some noise in that country to try and turn things around. Because yeah, it's, you know, ultimately, guys, this is not good. It's not good for the people of India. So anyway, guys, I hope you enjoyed that video. All the links to everything will be put down in the description. Let me know what you thought. Was I on the mark? Was I off the mark? Did you read or interpret anything different based on the articles I showed or what I said in the video? If you did, let me know down in the comments. I'm definitely interested in hearing what you guys have to say. So guys, just want to say thanks again for watching, and hope to catch you in the next one. Peace out.